Good evening, guys. Ken at Tortoise Capital. This is the nightly strategy podcast for nightly strategy podcast for May 4th, 2024. I'm going to start with some notes from coaching. This will have some general interest, I believe. This is from Jay. We appreciate his courtesy and willing to share. So let me say that this is really an example of approaches to learning. So there's a whole set of patterns that I teach and systems over here, many of them, and they're in various courses. Now, Jay comes from a very experienced professional money management background, a lot of active professional trading. And he has his own body of knowledge that's battle tested in the fund that he manages. So he's observed some of these and brought some back that are of interest. And so he's noticing how these ideas of mine can add value to his. So he's going to ask me some questions about observations that he's making on the way that he's arrayed the screen. And part of me says, yeah, the observations that you have are in all my courses, in the foundations course and the day trading course and the swing trading course. So study those. No, the best way to add value is to meet him exactly where he is and affirm that what he's seeing with this new set of lenses, I'm essentially giving him a new set of lenses to look at the world. And he's going to make sense out of that when he looks at the world. And so rather than saying, no, you must first master all of this stuff before you can begin to make sense, what we're doing is sensibly taking the minimum viable product where it looks like it could be adding value to his body of knowledge, and he's confirming. Now, what makes this exciting is that the observations that he's making are exactly where I would want him to be after he's taken a bunch of these courses. But the fact that he's noticed these things individually and personally is actually an affirmation that what we're teaching is what's there. So let's see what we've got. We're going to notice just a few things, how he's got his screen set up. This solid blue line right here is the RL10. I'm going to just turn that this color because it's a little easier to see. And that RL10 is equal to the trader's price. It's a smoothed form of the price. Doesn't have all the noise of the body and wicks of the candles. Now, you give up something when you do that, but you also gain other things, and that's part of the trade-off. Now, I'm going to notice that he has in green, which you can see, that's the RL30, which acts as the health of the trend. Got it. He's noticing that when those things converge, that means something, that means that whatever was happening before is probably over, and this is a new market. This is a new condition. End of story, start of new story. Now I'm going to notice that in red, he's got the PSAR dots. Now, one of the things I notice right away is that when the PSAR flips, it's at this price level and not where it should be, which is up here. If the PSAR is set to compute on the price value of the RL10, so where I'm drawing in these red dots here is where the PSAR is predicting, or where the RL10, I should say, is predicting the correct price. And now, if those prices were being used to compute the PSAR, then when this reverses, the new PSAR dot should have printed up here. So the fact that there is this little error between where it should print and where it does print tells me that probably he's not using the RL10 price value as the data to compute the PSAR. And the other place that I notice is that here, when the RL10 bottoms out here, this is where the PSAR dot should print. So the fact that there's a difference tells me, number one, Jay, just double check your settings, because I don't think that's quite right. It makes a small difference, but it's noticeable. Now, I'm not sure what this light blue line is. I'm thinking it's the RL90, because it is slower to recover than the RL30, I think. Then I notice it's a little hard to see, but he has a dragon in here, the RL10, or the 10-period simple moving average, and that looks like this. So I'm going to suggest that if he shades that in, it's going to be easier to see important moments. Like, one of the fundamental parts of this little setup and structure is that this dragon acts as a noise buffer on one side or the other. So what we now can say is, as he notices, about 30 minutes into the day, the RL10 was turning south and price was well above the dragon and the 30 SMA. So that's this point here. The RL10 is pivoting and is well above the dragon, which is here, and the SMA 30 here. Oh, I'm sorry, this is the SMA 30. Now I see what's going on. That's the SMA 30 in green. And that makes probably, this line is probably the RL30. I'm going to confirm that. Now, I don't personally use the SMA 30 as much, except, oh, yes, I do. That's the middle of the river. That's the Bollinger Band mean in the middle of the river. So that actually becomes an important price target. So SMA 30. That is the reversion to the mean trade, that when that peaks, the target on the reversion to the mean trade is this one. So he notices that. I have observed that when the RL10 crosses the 30 SMA, so going north, and then peaks, that this reversion to the mean trade is legit. That's correct. The other thing you'll notice is that when this price comes back through the dragon, it really just stays in the dragon. And now when the RL10 comes out of the dragon and it holds support above the dragon and above the SMA 30, that this becomes an opportunity to go long. So let's remember where that is. So there's trading opportunity number one. He asks, is this enough information to go short, even though the PSAR is still indicating a long side bias? The answer to that question is, if I go short in this region, What's my legitimate reward? It's a trade back to the SMA 30. It first has to get through the dragon, but my opportunity for gain is this. And if my risk is going to be that box, in other words, to the top of the RL10, if that's going to be my risk, if that represents my risk box, I can now say, given my reward is down here, how many of these risk boxes do I see? A little over 3. Let's call it 4. So a short somewhere in this area is going to have 1 unit of risk and probably 3 to 1 if it goes to there. So it is a frameable trade, and that trade can be taken if you want. It's justified by this move. So now we have to say when this reversion occurs, when that RL10 rolls over, the bar that made that roll over is when it closed here. So unless I had something like a standing order that said, hang this R box from the top, from the highest high, and then automatically go short if it breaks below, the 1 bar low, then what I'm really looking at is this is where the signal occurs. So I'm really talking about getting short in here, and my actual short in that case would probably be there. I would still have about that size of a risk box. And then I'm saying 1, 2, 3. So I have to accept a smaller risk box. And then while this is selling off, that moving target is moving up in here. And look what we get is we get a very interesting turning point. This is failure to fail further here. And then we notice that price is crossing the dragon right here. So now when price is coming out here in this 1, 2, 3, I have a possible entry. This is a front running entry compared to where I want to get long by rule is if I have this PSAR right here, that I can actually get long on the PSAR flip right here. And then my risk box is going to be to the bottom of the dragon, if I'm being aggressive, or to where the RL10 reverses, which is right here. So that's really a better risk box. And now you can see why it makes a difference if my RL10 and PSAR flip is anchored here versus here. Because now my positions, this is only about 80% of the size of this box, which means that I could have a 20% larger position size, and I'm going to make more money by having a manageable stop at this level rather than that level. So that's why we want to clean up the computation of the PSAR. So I could technically get long right here on a 1, 2, 3 entry. If I do that, the reason I would want to do that is because my risk box is going to be even smaller. It's going to be to where the RL10 belly is. And now my little risk box here is smaller than my risk box is over here because I have less information required to tell me that that trade isn't any good. And the key would be, this would be a collapsing dragon short if that risk box fails. So I would actually rather have a smaller risk box and be able to get into the collapsing dragon preferred sooner. Now, this doesn't mean that my position size has to be bigger. It could be that I just lose less money on a standard lot of shares. Like if I had something like 200 shares or 5 contracts, the amount that and I use that as my standard size, then the amount of money that I lose if that risk box fails is smaller compared to this one. I have to tolerate less adverse action. And if it works, I'm going to make extra gains on this piece of the move instead of waiting to get in here. I can get in here. Now, technically, this could fail more often. I'm paying for confirmation of the move, but the other side of that is I don't know how high it's actually going to go. So the longer that I wait for confirmation, actually, the less of the actual move I'm going to get once it gets moving. The only difference is that I don't know what the change in probability of successfully getting up to here would be if I enter here versus there. So in my view, instead of thinking about it too much, I make a decision typically to enter here and just accept the fact that the larger return is going to pay for the times when it fails, but I'm losing less on those fails, and I'm getting into a higher probability collapsing dragon sooner. Because if this thing has sold off to here and only gets this far and gets me in and then fails immediately, chances are the collapsing dragon is going to be bigger because there were fewer buyers because they dried up and turned sooner. That means that the sooner it fails, the better for me. So that's why even when I'm thinking about getting long here or here, the most important thing I have to do is make sure that I am well prepared to get short at the collapse of that support level. Now, once I have that in, and you can actually put that order in so that while you're waiting to get long here or here, what if it's here and you're getting ready to enter here and you put that order in right here and it fails right away? You want to be short right there. So that's a case where putting the stop order in first means that you get filled in the direction you actually want to go. Technique. Now let's look at a few other things here. What we had was the dragon look like this. Remember, that's going to be a 10 simple moving average with plus or minus half a standard deviation in here. So now when price rolls over, after it got to an extreme and then peaked, and we said, well, the return to the simple moving average 30 is my reasonable target. The first thing it has to do is get through this barrier, this noise barrier. That noise barrier is what actually, if it reverses and looks like that, then the dragon was good support and off it goes. But if it gets through that noise barrier, then there's a good chance it comes down to here, and then that's going to act as resistance on any rebound. And then if that fails again, I have kata twos to the downside. So that dragon acts as a really important price boundary. Well, in the case here, if you're able to get short somewhere in here, as we discussed, you notice that it will come down and essentially meet the rising SMA 30. And it turns out there was not a lot of payoff in that trade. But when it breaks out of that dragon, it came down, held support, and is getting ready to do this. You actually are front running a kata 2 right here instead of waiting for this move. And that's why this is the earlier entry. And then your stop level should be to where the bottom of the RL10 was, which is going to be where that PSAR should print. And now my risk box looks like this. And then the price that gets me short, if it started failing immediately, would be where the PSAR prints, or if it were properly constructed right here. Now, I want you to notice that that little signal of a potential upside trade, which is confirmed when that happens, the price that invalidates both of those is, say, the bottom of the dragon or where the RL10 prints, in this case, pretty close. And now notice that that never gets violated throughout the duration of this upward move, which we said before that probably terminates this storyline. The storyline here is that big move up, pulled back, held support at a crucial price level, and now the story is it may continue to go. So in the same way that this reversal, looking as a target for the SMA 30 is a legitimate trade opportunity number one, this little region here is trade opportunity number two. And the idea is that we're going to have a tactical trade with an upside target of the top of the RL10, because that's the limit of the price indicator. If it breaks above there, then we have an emerging dragon, and that's going to be double plus good. So what we have inside of this space with an entry, let me get that in green. If we have an entry either here or here with a stop down here, either one of those, then our price target is up here. This is the tactical trade space in which the first leg of this rebound trade can happen. If it gets through this resistance level, then we have the second leg up, and that's where we could think about adding a second position. You could actually split the difference if you're trading more than one contract and say, let me take a half a position here, and let me take half my position when it breaks out here, and then I'm getting an average price. But if this fails off of the first one, I am only losing money on a smaller risk box on half the position, and then I can put a full position on the trade that I want, which is the collapsing dragon. And then if it breaks above here, I can double my position. And now in here, what we have here is what I just classify kind of as a grinding higher lows. The oxen are pulling the cart, heading towards victory, and then right around in here, it no longer makes a higher high, and that's where the PSAR flips. So this is now on notice that you should better respect this rising SMA 30 and probably exit somewhere in here, because this is where you actually get the reversion to the mean. So if you had an entry at this level or at this level with an exit here, so if you have an entry in this region, you're actually going to make that on this trade, and then you can compute the number of ticks that you get compared to the risk that you took. So if you took the second entry, you're going to get probably this trade from this entry. If you take the better entry, you're going to get this extra piece. And both of those pay off compared to the size of the risk you took. So the short answer to your question is, it seems to be a very good indication and trading opportunity. That is correct. And now what you've seen is how we perform standard trade framing using our indicators as reasonable upper and lower bounds, and how we use the dragon as an intermediate noise barrier that gives us extra insights, and how we use the PSAR as an indication for directional bias that's justified, and how we compute everything in terms of reward to risk. And then we talk about what happens if it breaks out of this. Where do I really want to be short once all this tension is resolved? I want to be short at that where that red line was, and I want to be double long if it breaks out above the peak of the RL10. So it turns out that in this frame of reference, that the peak of the RL10 to the other peak of the RL10 actually defines the width of the maximum efficient channel. That's what the channel is. And then typically you're going to see the dragon in here somewhere. And I'm going to draw it just as the simple moving average 10 first, because remember, the middle of the dragon is the SMA 10, and the RL 10 is also a 10 period, but that's based on a moving regression line. So it's a little faster and it turns 1 or 2 bars sooner, and it's a sharp turn, whereas the dragon tends to roll over a little bit later than the SMA 10. And then it has that plus or minus 1/2. This acts as that noise buffer. So if I see the turn, I can make a decision to aggressively get short inside here at the risk of the dragon holding and then it becoming support, or I can wait for it to leave the dragon. And this is where I get the RLXD, the regression line crossing the dragon. What I'm looking at lately is this idea that the skin of the dragon is a very good exit. Like if I had been long on this big, remarkable, noticeable move to the upside, that when the RL10 peaks, the skin of the dragon becomes a really good exit. So this little moment right here not only could be the exit for this long trade, the front edge of the dragon is an aggressive entry. It's less aggressive than anything in here, but you'll typically see that on a really good move to the upside that has left the dragon, that your standard R10 probably fits between the peak of the dragon and the skin of the dragon. So one of the things that you always want to know is, what is the size of my R10? And I always want to have an R10 hanging off the top of that dragon so that for reference, I can tell when I've moved one of those standard boxes away. And if this was the high of the day, then I know that I have 9 more of those boxes to the downside because of the way that thing is computed. So I kind of always want to know where my R10 is and where my R5 is. The R5 is nothing more than 2 R10s. And if I use that as my risk, then I have 4 more of those to the downside if I'm going to make a range stat move. Is from the peak to the trough, average daily range plus 1 standard deviation is a range stat, and there's 10 R10 boxes in that, or 5 R5 boxes, which is why we name them that way. So now what I have is a way to start fine-tuning my entry in here. I can wait for the PSAR to flip, but now what I've done is I'm going to get an entry down here, and then the amount of distance to either the SMA 30 or where the R10 is going to peak, I have minimized the amount of potential gain by waiting for the maximum confirmation of the PSAR. So my earliest entry could be an R10 off the top, or get short at the skin of the dragon, or wait for the emerging out of the dragon, or at the RL10. Any one of those becomes a manageable, precise, mathematically computed entry. And now you have a decision about how aggressive you want to be in there. Could you, if your cost of commission is low, could you start putting partials in here so that by the time it hits here, you put your 4th and final position on? Yeah, you can get as fancy with that as you want. But if you do increments in, when it's time to get out, you should be all out, because you gave up a lot of the potential gain on the front end. You can't afford to increment out and chip away on both ends of the trade. You should either increment in and all out, or all in and then increment out. That's what I want to say about that. And that's quite enough for this little effort. So what I want to say then, to come back to the original point of this discussion, was that in the body of knowledge, the professional body of knowledge that represents, the tortoise and my methods, and Jay's considerable body of knowledge over here, what we just saw was that given a minimum viable product, in other words, just a simple lens of how to set up the trade chart with a couple indicators and some factors like the R10, the R5, the range stat, a couple of these moving averages and the lenses, and then one simple pattern, which is the Kata 2 and the collapsing dragon and the PSAR flip. He's already able to notice things that look like reasonable moves. And then this was where the move actually bottomed out. And then when it emerges, possible entry, certainly a good entry with a risk box, and then setting a price target. Now I can compare risk to reward and decide if that meets my criteria. Certainly, if I get long here with that same risk box, it's easier to see that I have a 3-to-1 and I'm closer to the collapsing dragon I want than if I wait for further confirmation. And then I've got to notice how if this thing is going to break out above, these little rising highs should continue. So right about here, instead of drifting down, this was supposed to get above here and keep going so it could test, but it didn't. And that's why this is the early alert that failure to follow through is happening. It's supposed to go, but it didn't. That may mean we're coming into the station and this entire trade frame, this entire trade series is done. And then I can say, it's the start of the news story. What's the news story? And that's what continuous trade framing looks like. End of lesson. That's what personal coaching can do for you. As you look to acquire skills, trust your eyes and judgment and ask good questions. I don't want you to think that you have to memorize our entire encyclopedia of material to begin to get started. That's one of the things that we learned in the Kata 2 challenge, which, by the way, is a very well-structured course that's getting ready to start with a new cohort with some really good people in there already. Send me a note if interested. All right. 30-minute hybrid frog, Alcoa. This is today's trade range. This red box represents the 5-day range. This is the 10-day anchored VWAP, the 30-day anchored VWAP, the 5-day anchored VWAP, and this little green line here is the 3-day anchored VWAP. And there's our Bollinger Band mean turning. That's nice. Here was the turning point in the dragon. Here was the last PSAR flip. Notice why that is such a good entry. You could also enter when it crosses the Bollinger Band mean. You might have entered a little bit earlier when it hit the PSAR flip, but your stop was always down here where the R10 reversed, and that was never hit during this entire move. Standard pattern, only this is 30-minute bars across multiple days rather than the 3-minute bars that were on Jay's chart. But the beauty of this is that it is all fractal. So this was yesterday's trade. Here was the gap up. That's what we miss by not holding that overnight, but we also would have avoided any sell-off. So today's a new day. It opens here, monkeys around, holds support, starts to move back up, entry, standard risk, nothing, I lose 0.5. I didn't get the re-entry. Getting out at 0.5 protects me against losing 1, but it prevents me from making that gain. So you just got to live with that decision. and decide how you're going to manage your risk and test different exit strategies and see how they fit with you. But once you have a rule, stay with it until you have accumulated evidence to tell you you can find better rules. That's the relentless search for improvement of rules. This is AI. This was one of the features of today. Large gaps off, lots of monkeying around, rising lows. Now we're 90 minutes, 2 hours into the day, standard entry, standard risk, runs all the way up to here, back down to here. I exit at the VWAP and I preserve 1R on that move. Caterpillar, no, this was a gap up and go. Long, runs up to here, reverses. I exit at the VWAP. I keep like 0.3 of that move. I gave up 2/3 of it. Is that sloppy, or was I giving it a lot of room to recover? You can call it anything you want. That's just my rule. Is I was in the money. I wanted to preserve no lose plus dinner for two. I was willing to give it the rest of that room until it would break north of the 10-day anchored VWAP when I was looking to add a second position. It didn't do that. So preserved a fraction. It sold off, held support. PSAR's intact. Here's the high bar. There's the next move up. I get long on a breakout, it feels like. Long, another little fraction. So I get maybe 0.6 out of that. I didn't lose any money on it. Gave it a chance to work for me. Happy. Cliff, same thing, fraction. DIA, same thing, 1R. Little bit better move. Disney. This was a gap up. Now I had plenty long. This is one where Disney gapped up, ran up, reversed down, made a new low of the day. So I get short when it comes through the VWAP. Sells off to here, reverses up. I preserve 1R. I stop and reverse. Standard risk down to the skin of the dragon. Exit near the close at the skin of the dragon. That's another R. So that nets about 2. Devon Energy, rollover for 2R. Emerging markets, 1, 2, 3 entry for 2R. ETHE, fractional gain on a breakout and go. EWW, rolls over, sharp sell-off starting, get short, make a nice 3R gain after it holds support at the 10-day SMA. I missed the second leg up. 2 short trades that scratched in Brazil. Home Depot, gap and go, ran up, came back, preserved 2R. Intel, tried getting short twice, basically scratched twice. IP, this is one that I'm holding overnight because it's a great industrial company. All this feels good. We got long here after this move, caught a 2 long, and it closed very well and broke through the anchored VWAP 150. That feels like potentially the start of something good, a great close and a great company. And I have this much cushion. I'm going to hold that one over the weekend as a long position. Try to turn that into a longer swing. It feels like it has cleared all the previous harassment. And there's still plenty of room for that to go on the long side. So just shifted to the 3-day. That's like a 1, 2, 3 entry on the 3-day. And now I'm looking towards getting through the dragon, top of the RL10, and maybe the peak up here. That's a potentially really good swing trade that I got a favorable entry on the intraday. That's why I'm holding that one. IYR, Gap up, new low of the day, short, trading it back towards the SMA 30. Took the exit here to preserve 3R. Coke. That's another one that's a 1, 2, 3 off the bottom intraday. I want to hold that long because Coca-Cola, and it's above the anchored VWAPs. I like it. KRE. Regional banks tried short for a scratch. McDonald's tried short for 2R on a collapsing dragon. 3M, no trade. Merck, no trade. Microsoft, Gap and Go. That's one I'm going to hold overnight again because it's cleared all of these RL10 or the anchored VWAPs, I should say, and now it's moving towards the one remaining, which is the 30-day. I think that's got potential to break out above 410. That's a longer term swing trade I'm trying to build. Marijuana, no trade, no breakout. Nike, short for a fraction. Nvidia. This is one that I started yesterday, that same idea of holding it for a longer term position. This is where it closed yesterday. I got a favorable gap, and all it did today was enjoy the day. And it's near a 10-day high, and I got a great entry down here. And I have about 5R cushion from this entry. So I'm just going to let that grow and be the first entry on what I hope is a really good long swing trade back to a share price of 1,000 and beyond. The most important semiconductor maker in the world, except for the politics of Taiwan semi. Clean energy, gap up and drop, short 2R. Palantir, gap up, missed the short, missed the long. An abundance. Short on Rivian on the collapse after the gap and go, then it failed. So short, 2R. SOUN, no trade. SPY was a gap and basically go and closed pretty well. Tesla, I tried long, not much there. Walmart, gap, sold off 1, 2, 3 entry on the value side of this proposition, held support near and above the 3-day anchored VWAP. I took the exit because I just wanted to make bank on 2R. U.S. Steel was weak today. We got it was collapsing while the rest of the market was gaining. So collapsing dragon, capturing half an hour. And then XLI. This is one that I thought about holding longer, but you know what? Monday's a new day. I'll collect 1R on a 1, 2, 3 entry off the bottom. All right. Let's take a look at the sniper trade of the day. So this was in Mexico. Here was the close. Here was the big gap up. Here's the OR3. I tried in the third bar when it broke out to go long. It failed. I gave it a lot of room at minus 0.7. When it broke out below here, short. Cash a fraction. It continued to sell. PSAR flip short. Came through the Bollinger Band main. I think it's getting ready to come down and close the gap. I got 2R battle drill, 2R enhanced, second position. PSAR exit, stop and reverse, lose half. Re-entry, COTA 2. This is now a COTA 2 entry. Breaks through the VWAP, second position, PSAR exit. This one earns 3 on the first one, 1 on the second one, minus 0.5. This one earned 4 on the first one, 2 on the second one. That's plus 6 and plus 4, minus a half and minus a half, or minus 2. So this was about a 6R day in Mexico. Take a look at the traders. So Beg your pardon. This is how you can use the chat room yourself to take a look at these charts as they're being posted. You can use the chat room to talk to people you might want to partner with or follow up with. These are foundations and coaching club members. Kevin, that's 2.3 in EWW. Essentially, he got the short. He didn't bite on this. He got short for a scratch, short for a taste, a taste, a taste, lost a little bit, made bank, lost a little bit, made a little bit, made bank. Net's 2.3. That's good work. He's in his second week of live coaching. No, actually, no, he took an early. He started a week early. He's in his third week. And a model student doing well. Gets paid here on, this is using the 30. He waits for the breakout from, below the VWAP and coming out of the dragon, gets paid here. And on a 1-2 entry, wider stop, gets paid here on the little reversal. So he makes 2 on the 30-minute. Much more relaxed, taking small shots. It gives him a little more flexibility to let the 30 run. And he used the 10-minute chart to time the first entry so that it was a little more fine-tuned. So that's really good practice. It may be that the 10 and 30 partnership is good for him. Hamad gets caught up here in the chop a little bit with Apple, but if you get one breakout, it pays for all of that. So those are shots worth taking, I think. This is Palantir for minus 0.8. Again, kind of a sideways chop day. Yeah, the second trade should be waiting maybe for a better pattern. I don't know. I like that as a short and a good. This is a good X. I would consider taking that as a stop and reverse, to be honest. But still, I like this. I would cut it sooner when it comes back below the VWAP and get short in this space rather than waiting. Although you did make bank on that. I think the only one I think is maybe premature is this one, but even so, I don't mind any of those. I think those are all fine. Don't overthink it. This is one where I think, can get a better entry short in that opening bar. That's dropping like a stone through the previous sideways quiet channel. Any entry in there is okay. And then this one is a clear 1, 2, 3 morning hook reversal. Here's bar 1, higher low bar 2. There's a bar 3. You could even enter when it hits the skin of the dragon and get your entry here instead of up here. And then your exit should be here, not all the way back down here. You could be short right there instead of right here, and then you get paid better in both directions. Then this is a great reentry and great reentries. Those are nice. And that's 1.4. So there's even more available in there. Brian continues to crush the Aussie US dollar. This should be green and that should be red to show long here and entry there or exit there. These maybe red-green colorblind. George, the stop and reverse pays off. I do, let's see here. Let's see if we are short here. and then reverses this high. I might even just say scratch right there. If this is going down this far and it doesn't close the gap, but starts to reverse up, don't let that become a -1, because that's where you could actually think about getting long for this. Higher lows. I would probably have tried this with a stop at the PSAR. And if that doesn't get me out, then I get paid here. So respect the PSAR. The rising PSAR would keep you in that trade. My preference is to stop and reverse here because it's supposed to fail. It did not. It's holding the PSAR. The dragon is holding as support. The R10 bottoms are pointing up. Stop and reverse, and my target would be to here, which is where it got to, and then probably exit back here for a scratch or something. But I like that as a stop and reverse because it got to here. I have every reason to think it could get to there. So I like that as a stop and reverse. Yeah, nothing wrong with that. It just didn't have any follow through. All right, weekend reports. Oops. Volatile, recovered support, favorable volatility, risk on, improvement in the ETF2 for exposure. So the market healed. New for blended monthly rebalancing. There's your buy on dip. It can break above this. Free and clear. If it breaks above this, second positions. If it breaks below, I'm going to say if it breaks below 500, you should be short. Like if this rolls over right away, I'm looking to get the first piece short there and the second piece here, because then it's coming back to here. Tactical trading between now and the elections. This is favorable on the 3-day, rising lows. That's favorable. And this little reversal is favorable. So we looked over the edge and didn't fall into the pit, starting to try to find recovery. This is what I like to see for recovery. First, the 3-day anchored VWAP is up. It crossed over the 10-day, which is also up. The 5-day sold off is now recovering. The target it made it back to today was the 30-day anchored VWAP. So this little sell-off has been successfully weathered, and the PSAR is working, and the dragon has reversed. And the RL30 just got into the owl position and is getting ready for an owl entry on the long side. And that means we're looking to recover back to the top of the R10 that's where the trade is successful. So between here and here, this is just tactical trade space. It doesn't become affirmative confirmation of new strength until it gets above the all-time high. So any failure through here, if we get long here, any failure in here is to be preserve capital from the win as a tactical trade. But you've seen the second leg up. This is a Kata 2. This is an SSC entry. This is the start of a Kata 2 entry here. And we've already moved out across the Bollinger Band mean. Finally, we weathered the storm of the harsh winter, which started here. Now notice we went summer, fall, winter, spring, back inside the Red River, getting ready to go. And as soon as it gets above this, we're into the summer. So very close to the summer next week. When you're feeling your way through the 30, what I notice always is where are the turning points in the R10s? So that all feels gently up. And you're seeing that there's a buying urge of that magnitude on each of those recoveries. So this is a natural place to wonder what's it going to do. So if it gets below 508, tactical short, gets below 500, tactical short, tactical long if it continues up to 525. Emerging markets played a little catch up. As did the other globals. IWM was better than the SPY. MDY, the mid caps, was better than SPY. Tech was better than the large caps. So that'll tell you. Diamonds were better than the S&P. There's your conservative play. Here's your aggressive growth play. MDY is your aggressive domestic growth play. China making a recovery. We may have seen the top there in silver and gold here. After hitting all-time highs and having really good runs, that may just be done. And it's a shift back to the equities. Be prepared. The industrials sneaking in here, and finance doing fairly well. Some tech strength to come off its poor performances. Honeywell, just a great American company. Intel, just as bad as it can be. Oh my God. They're almost like the GM of the semiconductors, too big to fail, and US government cash infusion to keep them alive, using the argument of we need their domestic chip production for national defense. I'm not immune to that argument. But they're certainly losing on the engineering front. There's your ETF Max. Been favoring the growth and speculative, and there's your strength in mid-cap growth. The S&P crushing all the other asset classes. Gold's had its brilliant run and may be done. Finance and industrials, not bad. And then in the strength column, all US, but there's some catch up being played here in emerging markets. That may be an opportunity as people may be cycling out of the US with the elections coming up. Maybe a way to play the globals. Could be. We'll be mindful of that. Winners continue to win. Standard work on liquidity for the top 30 ETFs. Stand by. Big gains in Goldman, Home Depot leading the way. Apple finally getting some recoveries here. Maybe time. Microsoft and Nvidia, those are your three tech leaders. Pretty good day for all the globals, but emerging markets really doing best. Starting to see some weakness in oil. So the energy sector may actually start benefiting from that as a trading vehicle, looking on the short side. Reasonable number of auto framers to choose from, a lot of energy names in there. And a good number of squeezes today. I like 3M, the Qs, and XLK. Intel, when it breaks, is going to be big. So I just can't stay away from that like a hyena playing with a carcass. This is your TC2000 auto framers sorted by reward to risk, being dominated by spring, starting to see some more entries in the summer, fewer in the winter as the market heals. Mostly strength, more so in the ETFs than in the Dow. Again, just want to highlight how strong relative to the US and the other choices EEM is. Becoming much more interesting to trade now. Standard work on the trading value short-term guys, marijuana, Nvidia, Tesla, clean energy, Intel. And the Friday move sort of lent a little strength to the idea that we're healing and that we got rising lows. The Z-score of the RL30 reversed outside of the Yellow River. That's favorable. So we could actually see this start to reverse. And now the RL90, this could be how that resolves. Next week's going to be an interesting one. We're going to see if the buyers can maintain this week's momentum. They stopped it from failing today and gave hints of gains for next week. We'll see if there's follow through, if their money is where their mouth is. So we'll get this published and posted. Thanks so much for your kind attention.